Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Now, let's have a look at some of the individual stocks on the move today here in Europe. I'm Caroline Hepkin. I'm joined by Bloomberg reporter Chloe Millay. Good morning.
Good morning.
Let's start with Stellantis. The auto stocks had a really bad day in Europe yesterday, and Stellantis, a whopping drop today.
Yeah, absolutely. Massive drop in the shares this morning. And that is because Stellantis said that it will be taking charges of about 22 billion euros as part of this kind of major restructuring of operations that includes primarily moving away from electric vehicles. So just to give an idea of some of where that money is going, within that 22 billion euro figure, we've got about 6.5 billion in payments to compensate suppliers, for example. And the CEO said that the changes were largely reflecting the cost of overestimating the pace of the energy transition. So now they're kind of walking that back. He's eliminated fully electric models and also left a joint venture with a South Korean battery manufacturer. So very much moving away from those previous ambitions under the previous the previous CEO around those electric vehicles. And there's other big parts of this restructuring strategy. One of the main things as well is refocusing on the US market, moving a little bit away from Europe as well. So charges were expected, but they are actually way ahead of what analysts had anticipated, which explains this really negative stock reaction this morning. And now it really puts pressure on the CEO, who joined just last year in June, so he's not really been at the helm for that long, but it's really putting pressure on him to show that those really big changes around electric vehicles, around moving away from Europe, are going to start paying off at some point.
Yeah, and Stellantis' share price down as much as 18.5% today. Sticking with automotives, how is Kongsberg faring this morning?
Very well. We were talking about electric vehicles, but this is about armoured vehicles, and it seems that in this environment it's probably much better to be in the armoured vehicle business than the electric vehicle business. So Kongsberg operates kind of across a range of industry, but the one that is really going to be the focus today is the defence side of the business. So it's signed a contract that is valued at about 140 million euros to deliver remote weapon stations to the German and Swedish armoured vehicle system. So a remote weapon station is a system that allows to operate weapons using a joystick from inside the protection of a vehicle. So essentially we're talking about the gun that sticks out of a tank. So they provide that. And so that is a big contract. And then Kongsberg also reported earnings today, and it had all the divisions reporting double-digit growth in 2025 and as well in the fourth quarter. And it also said that they had a really strong order backlog. So it seems that Kongsberg is in great shape overall, and that really contributed to this huge jump in the share price this morning.
Yeah, very interesting, as Europe, of course, grapples with the fact that there are so many different tankers being built by so many different countries. Mm-hmm. That point's been made frequently, that there's sort of too much of a range, lack of interoperability. I think very interesting. Okay, let's also think about Orsted reporting a profit miss. How are investors digesting that?
Well, it seems that they're actually fine with it, because the company also plans to reinstate dividends and to also accelerate spending this year. So there seems to be an effort from Orsted now to kind of move on from the troubles of last year, when it had to deal with so much pushback from the Trump administration against the wind industry. And it also had to do this massive rights offering to boost its balance sheet. That's the rights issue that's all we could talk about last summer, I remember. But now the company wants to return cash to investors for the first time since 2023, and it wants to really focus on what is next. So that's what investors are focusing on this morning, which explains the share price actually jumping this morning. But it seems that troubles are getting a little bit better, but the outlook is still quite uncertain for the industry. The Trump administration has not changed its stance on wind turbines. It still hates them and still wants to kind of hold the projects for Orsted and other companies within that space. The costs are still high. Supply chain issues are still a problem. So it's not out of the woods just yet, but the fact that the dividend was reinstated was reassuring to investors.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.